What's going on, friends? Hope you're doing amazing. It's your captain of the candlestick, Mr. Jeremy Alexander Newsome. That is me speaking in third person, which is really dumb to do. Hope you're enjoying your Friday. In this video, we're simply discussing and looking back at a previous trade that a trader did and talk about it, learn from it, talk about the good, the bad, the ugly, the pros, and the cons. Take that information and apply it for future trades. Let's dive in together. You rock. Hey traders from around the world, what's going on? It's your boy, Jeremy Alexander Newsome with reallifetrading.com. Ending up strong on the day. It's Friday, and today, instead of me looking at the market or reviewing some trades, which I do every single day in the afternoon room anyway, going to be reviewing some trades that some traders out there set up. And normally I do one on Friday, but today's special. I'll do two. And I'll be doing that because the free week is right around the corner. Come to reallifetrading.com and click this little banner right here. It's also available on your phone, iPad, or mobile device. And just click that, sign up, be there. July 22nd through the 26th. That is next week. It's going to be amazing, and I'm very pumped to interact with you during those times. All right. So let's go look at FCX, and this is one that my buddy Will wanted to review on. And so Will mentioned that he took it 11:51 by 11:39, and he's playing it on the 3-minute chart. So let's go and look at FCX. And what I want to first discuss is the gap today. And that's why Will was playing FCX. And first off, Will, great gap selection. Very pretty find on FCX. You can see it's gapping above the high of this candle, right? We've really been trading sideways for arguably a month or so, and we're gapping above recent pivots. Definitely clearing the high of yesterday and above all the short-term moving averages. Now, normally I'll just kind of look at and pull up the long terms just to see where they're at. And you'll notice we got very, very close to hitting those today. And that would have been an area to consider taking off some potential profit. Even though we didn't quite hit it, which is definitely a little bit lame, that is where I would have tried to peel off some of my profits. So William ended up making 0.3 R's on the trade. Let's go see how I would have done in hindsight. Again, I did not personally take this trade, although we did absolutely dominate it out there in the trading room today. Here's FCX. And first, I want to look at the extended hours. What I'm noticing on the extended hour chart is we're making higher lows. So we're making higher lows. You had a decent little resistance right around there before the market opened. And the very first 3-minute candle was a decent shave top bullish candle that closed above the pre-market resistance. So you can see this little bearish candle, this little resistance, this little dash right there. We closed nicely above all of that. First 3-minute candle did. And Will took the entry right above the high of that candle, so got in bullish 11:51. So the close of this candle was 11:50. So we went 11:51 with a stop right here at 11:39. First of all, that is beautiful. Fantastic setup. I love that so much. That is great. And 11:39 is right here. So that whole process is pretty much spot on. I mean, the entry, the stop is really, really solid. And the challenge with on this one, Will, is I'm quite certain that you had 11.75 targeted to just get out of everything at 2 Rs. So you had everything scheduled to get out at 2 Rs, and obviously we just didn't quite hit that, which is unfortunate. And I like this trade. I mean, everything about it to me is a trade that worked really well, started running out the gate. So your first 3-minute candle, if I go back over to your setup, again, I don't know what these lines are on your screen, the blue and the purple lines, but again, I know you're trying to aim for that 2R target. So whatever these lines are, if you had a pre-drawn resistance to some degree and at some point in time, that is most certainly where I would have exited some position, which you probably did. You most likely took some position off the table there on FCX, and then I'm assuming you put your stop to break even and got trailed out around here when it broke down, and your profit was just simply from the taking of the profit. And I think that's probably the best way to play this trade, man. I mean, I know in hindsight we can look at all kinds of things, but even in hindsight, I think that's a great way to play FCX. This is obviously a super bearish candle on FCX. So what I could say is if I had seen that candle and I did not take a partial position, I would certainly have taken a partial position below that candle. So I would have gotten out of almost everything when this candle came in. And then yes, I would have put my stops to pretty much break even, and I would have gotten trailed out there as well. So you played that one pretty much the same way I would have. You won small on the trade. I'm certainly not saying I would have exited everything there for 1R, because you had the bearish candle and we closed above the high of that bearish candle and just everything looked good and just didn't quite make it to the target. Overall, man, beautiful trade. Now, let's hop over to an official trade that took us all day in the trading room to make some good money on, but we got there and it was wonderful. I'm bringing up Frank because this is one of the first trades that he placed, actually. So him and I had a coaching session about a few weeks ago, and check out this trade on Skechers. So I did not, he did outplay me on this trade very nicely, in fact. He outplayed me, and it was a wonderful setup. But this is just classic fade. Shout out to my girl Ashley, who also this morning was looking at Skechers and knew that it was going to be a fade. So there's no chance in the world you're going to play this one bullish. Ton of buying. Look at this. Look at all that buying on Skechers. So this thing was going from 28 to 35 in like a month and a half. Now, I'm not really good at math. Actually, I'm pretty good at math. But here is 25% return in a month and a half. So 25% return in a month and a half, and then it gaps up 45% over the last 2 months. I mean, come on, that's huge on Skechers. So you know you're going to be taking a profit on this particular trade. People are going to be locking in their gains. And then check this out. 5-minute chart. Let me just hide all the drawings for a second because I will show you my trade and I'll also show you Frank's. I feel bad that I didn't take this. I should have. I'm still a little bit sad at myself. But look at this upper shadow. Massive bullish candle. Immediately trade down and then just inched higher all morning. And then at market open, had a little bit of a tank session. A lot of people bought it and it ran right back up. And what did it do? You're absolutely correct. The high of this wick was 40.40. We went to 40.50. That is exactly where I should have shorted it just because the risk reward makes sense. I certainly should have gotten in right here, just a little bit above the high of that candle, because that's where all of the newbies are buying. So I should have sold short there with a stop at 41 and some change. And that would have been my 1R risk. That's how I should have played it, and I honestly would have gotten a little bit better. Not as much as I did. Well, sorry, let me rephrase. It would have been more than what I made on it, but I was just scared. I let FOMO or something, whatever it was. I don't know what it was. It wasn't FOMO. It was just the fear of losing, fear of being wrong. I let something talk me out of that trade because that really was the perfect setup. But anyway, here's how I played it. And, it was definitely a wide stop. So once this magnificent bullish candle came in, right there, you had your evening star reversal pattern. Boom, boom, boom. So there's your evening star with a nice lower shadow. And once it broke below that candle, I did a limit sell at the low of that candle with a stop above the high of the day so that I could lose less than 1R. And that's precisely what it did. So it broke down, it retested. I had my stop up here. It traded down, it retested, and when it rolled over, I took my stop from here and moved it to 40.27. And then I moved my stop second time to 40.02, somewhere right around here. And then I moved my stop the fourth and final time to 39.96, somewhere right around here. And I also added to the trade as it went down a little bit. So I added to the trade right here. I sold some more, added to it again right there, and sold some more. And again, kept lowering my stop. So I did have risk on the table, but as I was lowering my risk, I kept adding to the trade, and I did get out at 38.82. That was my target on Skechers. Got very, very lucky. So if you're wondering why I played it there, very arbitrary number, purely guessed, because Skechers was taking forever to break lower, and I did not think it'd make it all the way down to here. So I said, you know what? Let me just put it randomly lower than this candle, higher than this candle, and I got lucky with the exit at 38.82. So since I added to the trade and played it well and exited almost at the exact bottom, I got just a little bit over an R, 1.1 Rs on Skechers. So that was a really good trade, and let's see how Frank played it. So my boy Frank, 40.46 by 41.46. So he did the exact fade that I should have done, practiced it numerous times, just an absolute chicken foot. Frank, I mean, A+ on the entry, shorting where everyone else is getting in, right above that very, very obvious candle on a gap, on a stock that's up 45% in the last 2 months. Getting in there, putting your stop nice and far away. I mean, realistically, like forever away, right? So you had your stop at 41.46. So that is an eternity. You know, getting in here and having your stop up there is a $1 move. I could have said in that situation, I mean, have your stop a little bit lower. I think 41.20, 41.16 would have sufficed. That's what I was thinking when I got into that trade. But remember, I got in much, much lower than you did. And you outplayed me on this one, man. Just front, left, and center. So 41.46 was the stop, 39.30. So you got a little bit more than an R on that trade. So it seems to me that you exited. Oh yeah, what a play, man. What a play. Frank got out somewhere on this candle, right when it just puked its head higher just a little bit, right when all the newbies are getting in bullish. Pre-market high breakout on a stock that's up 45% over the last 2 months. That's when you're going to be buying it, right? And then it just puked and dipped, and that's where he got out for a gain. Man, Frank, that's one of the best trades, one of the best fades I've seen in a long time, and I should have done that with you, and all I can say is I'm sorry that I didn't. Your entry was exactly where mine would have been or should have been, and my stop would have been a little bit closer. It would have been, honestly, just a little bit over 41. So 40, I should have done 40.40 by 41.16, 41.17, 41.20, something like that. That's how I should have taken that trade. Still won on it. Happy we won on it. Everyone who played Skechers won on it because the real life trading team was bearish all day. And congratulations to both Will and Frank for making money on both of those trades. It's been an amazing week so far out there for the trading room and just for real life trading. Next week, everyone gets to watch me do it live every single day. I'll be there. Thank you so much for tuning in. Folks from around the world, you rock. And until next time, love life, and trade it. Bye.